Hot, dry conditions turned vast forests into carpets of kindling. It fueled a trio of wildfires in California that killed at least 86 people last year and destroyed thousands of homes.
Huge flames coming up over the ridge. They were shooting up behind it, just coming up. I'm going, oh my God, we got to go through this stuff.
Randall Parkinson's among a group of survivors who are suing California's largest power distributor, Pg&e.
The allegation is that Pg&e's equipment failed, that its transmission line started this fire, resulting in a massive fire, a massive disaster, the destruction of property, the destruction of people's lives, and at this point, countless deaths.
The power firm has filed for bankruptcy, citing $51.7 billion in liabilities. Pg&e's CEO resigned this month, and the firm's lost 3/4 of its market value in the aftermath of the fires. Insurance companies are also taking a hit as thousands of home and business owners file claims. More than 13,000 insured homes and businesses were destroyed. California's Insurance Commission says more than $11 billion worth of claims have been filed so far. And AccuWeather says November's fires cost California's economy $400 billion. That's the equivalent of about 2% of U.S. GDP. President Donald Trump has blamed state authorities for the fires, saying better forest management would have prevented them. He's ordered a halt in federal emergency funds to California, a decision condemned by Democrats.
How shocking it is that this president would say he's going to withhold funding to meet the disaster assistance, disaster needs of people, unless you have a different definition of what a disaster is and the needs for assistance. You have no right to withhold those funds.
The National Oceanic and Atmospheric Administration says 2019 is expected to be among the hottest years on record. The people of California hope that in Washington at least, cooler heads prevail. Paolo Montecillo, TRT World.
Let's get more on the story now with energy analyst Stephen Schork, who's also editor of the Schork Report. He joins us now from Villanova in Pennsylvania. Good to have you on the program, Stephen. Pg&e had already flagged that it was looking to file for bankruptcy. Now it's actually happened. Was this the right move for them?
Absolutely. I think that this will give the company some time to reorganize and get its ducks lined up in a row. We have to keep in mind this liability that we're seeing in Pg&e is not ununique to what we're seeing with the rest of the utilities and what we've been seeing in the power markets in general over the past 20 years. So what we're looking at here is the dirty little secret of deregulation. So now that we've opened up our power markets, and another point that the government has come in and has, by fiat, ordered renewable energy, companies such as Pg&e have been disincentivized to upgrade their infrastructure. That is to say that they can no longer compete, and therefore they were encouraged to kick the can down the road. So now, 20 years later, after this has all begun, we're now reaping what we sowed. So it's not just Pg&e, but it's the utility industry in general that is extremely vulnerable to its equipment. Now, whether or not Pg&e is ultimately responsible for the Camp Wood fire, which was the major one that killed 86 people, remains to be seen. We'll probably have a ruling on that at some point in the first quarter here. The good news for the company was a few days ago that it was exonerated from its largest 2017 liability. So they were expecting about a $17 billion hit on their liabilities to those fires. And the major fire they were exonerated with cut that liability by 3/5. So hence why the stock has had a bit of a rebound, and it has done the right thing, I believe, in staving off Wall Street, who would have come in and dissected and diluted that company without the ratepayer in mind. So at this point, the bankruptcy going in, giving the company time to reorganize, to refresh, I do believe is the right decision.
And what about the future prospects for Pg&e as a going concern? The hedge fund Blue Mountain Capital, which owns around 1% of the company, says filing for bankruptcy is damaging, avoidable and unnecessary. Do you share some of their concerns?
Well, if I was Blue Mountain and I bought the stock at its highs right before it crashed 80%, I think I'd be singing that tune also. So at this point, it's a hedge fund. It's Wall Street. They were going in, they were taking a highly speculative risk. So I'm absolutely going to discount anything they're saying with regard to the viability of PG&E staying afloat without more Wall Street coming in and trying to dissect the company. So no, coming in, bankruptcy protection. This might not be great for the investors in the two hedge funds that bought into PG&E prior to the stock fall, but certainly the company has an ultimate responsibility to the ratepayer and to the consumer in Central and Northern California.
So do you think as America's largest utility, PG&E will continue to operate for the foreseeable future?
I absolutely will operate. The lights are not going to go off in Silicon Valley there. I think the bigger question now is, does PG&E stay an independent company, or this is California and Northern California in particular, does the state come in and now and assume control of the company? That remains to be seen, but no, the company has to. It supplies all of the natural gas, all of the power to a good portion of the largest state in the country. So the lights will stay on. The question is, will it be privately financed or taxpayer financed?
Interesting days ahead for PG&E. Stephen Schork in Villanova, thank you for your time.